And joining me now is Aadil Zaman, a partner at Wall Street Alliance Group. Aadil, thank you so much for joining. What's your reaction to today's market volatility?
Great to be with you, Kristen. So I think the market right now is basically the trillion-dollar question for the market right now is this Fed tightening going to create a recession, right? And that's what the market is trying to factor in. We are of the school of thought that even though we have a very strong consumer spending, which is still about 70% of our GDP, and we have a very strong labor market. For every unemployed person that we have two jobs that are open. So in our opinion, eventually, for that reason, the Fed will be able to orchestrate a soft landing, and eventually the market is going to bottom out and start to go back up.
So another question that I have is all eyes on inflation data tomorrow, 8.5% price gains that we saw in March. Aadil, there is the expectation on Wall Street that April's print will come in just a hair below that. Do you see a peak in inflation, that inflation, especially due to high comparables in earlier months, might be moving to the back seat, not as high as it's been in the past?
I think that this inflation data will probably be right around where expectations are. And a lot of that has to do with the China lockdown situation, which is causing disruptions in the supply chain. And what we have to understand about the market right now is that it is in the process of finding a bottom. And this bottoming out process is really a messy process because we don't know where the bottom is. We don't know when the market is going to turn around. But usually the bottom is indicated by some type of a trigger event in the market. And if this inflation data comes drastically below expectations, that could very well be a trigger event. And usually when a trigger event like that happens, that's when the market bottoms out and starts to go back up. So we'll have to wait and see for it tomorrow.
Well, when it comes to corporate earnings, Aadil, already we've seen companies announce this week hiring freezes, that they're going to be scaling back on hiring. What's the effect to corporate America? We know inflation is clearly hurting the wallets of many Americans, especially low-income earning Americans. But what about corporate America? What are some companies or even sectors that stand to better weather this storm?
Great question, Kristen. So one of the things that we are seeing is that as corporate earnings are coming out, there seems to be a shift in consumer spending away from goods, more towards services, especially related to travel. People haven't, because of COVID, haven't traveled for a few years. There's this pent up energy and people want to get out and splurge on vacations. And, because of that, we are seeing that Singapore Airlines, for example, is selling out of their business class tickets before they're selling out of their economy tickets. Alphabet, if their earnings overall were a bit disappointing, but a silver lining was Google search-related advertising, which benefited from travel-related search. So we think that a pocket of strength in this market is going to be businesses that are going to benefit from services and travel-related spending in particular.
Okay, so when it comes to travel, clearly we see demand picking up. We've gotten a whole host of indications, Aadil, to your point, really just in the past week or so, the travel demand clearly is still there, and good to see, I think, to some regard, the business travel starting to recover as well. We did see, though, the economy actually contract in the first quarter of this year. You mentioned it off the top. The biggest concern is, could we be headed toward a recession? What are the factors at play there? Of course, the coronavirus, China's zero-tolerance policy is a factor. How much of a factor is Russia's ongoing invasion of Ukraine?
I think that Russia's ongoing invasion in Ukraine is definitely a factor. The factors that are really causing a lot of hazard in the market right now is the Russia situation, is the China COVID lockdowns, and is elevated inflation and Fed tightening. And the market is trying to figure this out. But what we have to remember at the end of the day, Kristen, is this is not the first time that we are going through a cycle like this. Since 1947 up until the end of last year, we've had 14 bear markets where the S&P 500 has gone down more than 20%. Each time the market has recovered and actually gone higher. So we feel that this time it's not going to be any different. And the prudent strategy, if you're well diversified for investors, is really, even though it sounds boring, is to stay the course, focus on the long term, not be distracted by short term panic.
Okay, so you think when it comes to the long-term deal that we still haven't put in a bottom yet, that investors on the sideline should maybe wait a little bit longer because stocks could fall further. Is that right?
Kristen, continued volatility because of these issues is anticipated. This bottoming out process, we cannot tell where exactly the bottom is going to be. So we have to wait and see. But the way to play it is that if you like a company, you should be willing to buy it a bit over here and then be able to buy more on declines. And for the past 3 years, we have really been hungry for bargains in the market. And right now, we are getting some bargains in the market where great quality companies like Microsoft and Amazon, for example, stocks are down more than 20%. They have thriving businesses. Their cloud division is doing extremely well. Those are some of the areas of the market that we are focused on opportunistically for our clients at Wall Street Alliance Group.
All right, so give me the list of sectors, Aadil, that you're staying away from, the sectors that you like.
We think that boring is back in vogue, Kristen. So we actually like utilities over here as well, because there's this huge movement that's happening towards electrification, where people are now buying electric cars. Cities and towns are now moving away from natural gas for heating and towards electricity for heating and cooking. And utilities are also relatively economically insensitive, so relatively recession-proof there. And they pay a good dividend, which makes them a great inflation hedge. So we definitely like utilities over here.
All right, Aadil Zaman, partner at Wall Street Alliance Group. Aadil, thank you so much for taking the time.